joined now in the studio by financial expert Brendan Burgess for our weekly Money Stories slot. Brendan is joining us every week to discuss people's own stories about their debts, their loans and their relationships with their banks. And Brendan, what do you have for us this week?
We're going to look at subprime loans this week, Myles. When people go to a bank to get a mortgage, most of them can get them from the mainstream mortgage lenders like AIB, Bank of Ireland, Permanent TSB. But in some cases, if they have a bad credit record, they will be refused, and then they can apply for subprime loans. Subprime mortgages are more expensive because they're deemed to be riskier. And we're looking at a guy today called Jack, who is a taxi driver. Jack had a small mortgage on his house. He was with Permanent TSB, and he had a wife and children, and he decided he needed to extend his house, so he wanted to borrow another €100,000. But because he had missed a payment about a year earlier, they said they refused him a loan, but they referred him to their sister company, which is Stepstone Mortgages, and that would be a more expensive mortgage, and they offered to take over the whole mortgage at a rate of 8%, whereas he would have been paying around 4%.
Okay, so he couldn't get a normal mortgage, but he found a subprime tender, or subprime lender rather, as he explains here.
Business was good. I wanted to extend the house, and it was either extend the house or move to a bigger house. So we decided, right, we've got a good house, we'll add on to it, we'll extend it. So went to Permanent TSB Bank at the time, and they refused me. And that was simply because I had missed a payment, I think the year previous to that, and this was still on my record. So I was down at sort of whatever, a higher risk at the time.
Only one payment?
Yeah, one payment, and that was basically paid off within 3 months. And I couldn't understand why, and they sort of said to me, well look, there is a company here which is a sister company to us, known as Stepstones or Stepping Stones or whatever it be, and I decided to go out on the market myself and have a look around. So I found GE was giving it to me 0.5% cheaper. So approached them and sort of gave them a call initially and gave them the history of the story and whatever, and they came back and said, yeah, we'll give you the money. There was no problems with it. They wanted to bring in a car loan into it, and that was with GE as well. It was a car finance loan. They just brought that all into the one melting pot and decided, yeah, we can give you this money. Overall, we borrowed $250,000.
Okay, so what are the issues then arising from the experience of Jack?
Well, the main issue here is that he was deemed to be risky because he had missed one payment a year earlier. He had a taxi business. He still has a taxi business, and he changed from chasing the business out on the street to actually developing corporate business. And that took a bit of time to develop. He missed a payment, and based on that, they decided that he was risky, despite the fact that it was a relatively small mortgage, and despite the fact he only had 80,000 on a loan worth 400,000. I mean, at the same time, Myles, the banks were lending first-time buyers 5 times their salary and 100% mortgages, and they were not considering that to be particularly risky. Whereas in Jack's case, they said, you missed one payment, therefore you're risky, therefore we're going to lend you, we're going to refuse you an extension, but our sister company, which charges more, will lend money to you. Okay. So he went to GE. GE took over the main loan from Permanent TSB, so the 80,000 that he was paying 3.5-4% on has now moved to GE, on which he's paying the full rate, which was about 7.5%. He got the extra 100,000, and he had a car loan already with GE money, and he transferred that as well into the mortgage. So that now car loan is now also secured on his home.
So at the moment paying over 7%, which, as you say, is more or less double what he was paying to Permanent TSB. And I presume he's wondering why he should be paying so much.
The conversation that I had with GE was that because they buy their money dearer on the markets, that's the reason why they have to charge you a higher interest rate. It's not really down to risk. It's because they're buying at dearer rates.
And what did you think of putting your car effectively on your mortgage?
It was a thing I didn't really want to do. But at the time, the way business was, it was good. Everything looked rosy in the garden. So, yeah, I said, right, we'll go with this. And mainly it was because they had told me that the interest rate would basically come down after a year, as long as I stayed very, very clean with the mortgage and everything was up to date. Or I could transfer to another lender. But now I find I can't.
And that's the theory. The theory is that a subprime mortgage isn't for life, as it were.
Yeah, the general plan is that you have a bad record, you spend about 3 years with your subprime lender, you prove that you're a good borrower, you repair your credit record. That's the expression that is used.
It's purgatory, basically, isn't it?
That's a good way of looking at it. It's a form of purgatory.
It was
Except
purgatory, now it's hell.
Purgatory is on the way to heaven, isn't it?
Well,
I remember my catechism. But
I think you're right.
A lot of these guys, some of them do. I mean, around 40% of people who have taken out subprime loans have over the years moved to mainstream lenders, and they've repaired their credit records. They're now paying cheap loans. But what happened in this particular case was that the market, well, not in just this case, what happened was generally across the board, the credit markets froze, and the whole area of switching mortgages. I mean, you used to be able to switch from AIB to Bank of Ireland if you could get a cheaper rate, and that's all gone now. You can't switch from a mainstream lender, so you've no chance at all in switching from a subprime lender to a mainstream lender. So people who took out subprime loans are now stuck with them. They can't move.
So he was managing to keep up the repayments, even though his income is now falling with the recession, until last year when a problem developed, and he explains all of that in the next clip.